Welcome back to Switzer on Sky News Money. Centuria is a listed company engaged in a range of activities from property development to investment bonds, and it has been a pretty solid performer for those who have invested in the company. To explain its strengths and where the company is heading, we have the CEO, John McBain. John, thanks for joining us.
Thanks, Peter. Good to be here.
All right, now, mate, I've always known the many things that you do, but I've got to say, in all honesty, I don't know exactly what is in the publicly listed vehicle. So explain the publicly listed Centuria vehicle.
So Centuria Capital, CNI is the headstock, and it owns its various satellite funds managers. So we control a large unlisted property funds manager with about 1.6 billion of assets, and people can buy those investments. It controls 2 real estate investment trusts, which are listed in their own right. CIP, which is an industrial REIT with about $1 billion of assets, and CMA, which is an office REIT. So I know that's a lot of property, but each one is doing something different.
Yeah, and I've got to say, I know you really well, and I know what you do, but it still confuses me. So I'm going to just clarify it. So there's a head company, and the head company's not listed, right?
No, the head company is listed.
Okay, and what's the name of that company?
Centuria Capital.
Good.
CNI.
Okay.
Yep.
And so you got investment bonds, for example.
Yeah, so that's another division.
Yeah, do the money you make investment bonds end up in Centuria Capital?
Correct. So all the money, Peter, that comes up from management fees that we make for managing the property funds or managing the affairs of the investment bonds flow to the headstock.
Okay. Now you also have these REITs as well, and explain to my viewers what is the typical transaction of these REITs.
So the REITs, that's Real Estate Investment Trust. It's a listed vehicle, so it's taking property, and instead of owning the property directly, it's securitizing it into a listed trust. So people buy units or securities on the stock exchange, which they can buy and sell on T+2. And a typical transaction could be to buy an office block or a factory, and they have a yield at the moment, which is paid quarterly, somewhere in the range of 7 to 8%.
Yeah, and how many properties are inside each REIT?
Yeah, so they're both at slightly different sizes. The office REIT contains about 23, 24 properties. The industrial REIT's a little bit larger at $1 billion. It controls 34, 35 properties.
But you also go to market when you actually discover one big office block, don't you? And you might decide that you want to buy it, renovate it, let it out, get the capital gain and get the rental on the way.
Yeah, so we generally do something if it were a half vacant building or something where we've got a lot of experience in that area, and we would probably put an asset like that in our unlisted property area. Yeah. Which is
so it's a private REIT, which you call an unlisted REIT.
Unlisted.
But the money you make from that ends up in the listed company.
Well, not all of the money. Most of the money ends up in our investors' pockets.
Oh, yeah.
Which is the whole point.
You're always marketing your great performance, aren't you?
Well, we're happy with that performance.
Yeah, but I'm saying, what I'm trying to say, if people like what you do in the range of activities, they would be best buying Centuria Capital.
Well, look, we have
say no.
We have an ideal investor. I think an ideal investor for us is we've been around for over 20 years. So someone who might have started investing in our unlisted property syndicates and has over that time enjoyed it and made some money, he might take an interest in some REITs, one or two of the REITs, and he might also buy an investment bond for long-term savings.
Well, I want to bring that up because the changes in superannuation have actually made the future of investment bonds reasonably attractive, haven't they?
Yeah, so investment bonds or insurance bonds, they've been around a long time, but I think the headwinds that we're facing with changes to superannuation, capping contribution limits, the sabre rattling around, taxation of discretionary trusts, which seems to come up perennially.
Labor wants to do that.
Correct. And all that sort of discussion, when might my super vest, what age might I have to be, what changes are going to be, it gives our investment bond division a headwind, because people say, you know what, I know these investment bonds, I can put my money away for a reasonable period of time, I can choose the underlying class of the investment, and when I get the money out at the end, I know there's been some tax paid on the way through, but at a concessional rate, and when I get it out, it's tax-free.
Yeah, so those people who might say be in the unlucky situation of, say, having 2.6 million in their super, they might want to take that million, which they might put into either accumulation mode. They might think about, well, why don't we just throw into an investment bond?
Yeah, so exactly right. And I think we're experiencing quite a lot of activity or interest in our investment bond products, simply because there's been a flurry of activity. I think there's been $20 billion of money put into the superannuation network for the 3 months heading up to 30 June. And now people are saying, well, what can I do now that can minimise legally my taxation outcome if I'm a long-term saver?
Are you going to be sending Treasurer Morrison a Christmas card this year?
No, I'm going to be shutting my mouth, because our little tiny sector of the market, we pay what tax is owed on behalf of our policyholders, and I don't want to keep a high profile.
Okay,
here I am on television.
Yeah, that's right. Well, I made you. I twisted your arm. Now, let's talk about one of your unlisted REITs. There was one, wasn't there, where you bought it in was it Elizabeth Street, Sydney, or around that part, and then the state government wanted to use it for a railway station. That one became a rip-roaring success for the unit holders who invested in it.
Correct, in Castlereagh Street.
Castlereagh.
It's not the only one that's been successful, but
no,
look,
of course.
That particular example...
Explain how the whole thing works.
Yeah.
People, I think, get to understand what an unlisted REIT is like.
Fair enough. So in that particular example, there was a building that was quite an old building, built in the 70s, had quite a lot of vacancy, and we decided that we liked the location, and we thought that our property team, and we've got a very big property team, could upgrade the building and refurbish it and release it. On the way to doing that, which took about 18 months, then we decided we might sell it. We'd finished the job, and the state government were one of the tenderers for the property. You know, that was a very happy day for our investors. I think we paid 56 or 57 million for the property, and we sold it for in the 90s. So it's
the method really is, historically, people know what building you're going after.
Oh, for the unlisted trusts, absolutely. I think that's what's been quite popular about them. You know, we've got 12,500 investors, and it's growing all the time. We make it very clear what the property is. We give them a lot of information. We tell them what the risks are, and they can choose which property they might prefer, A or B. Whereas with the listed real estate trusts, they're simply investing in a portfolio of properties. Once again, they're trusting our management skills, but they have the beauty of being able to leave within a couple of days.
Well, the first time I really started to understand what you did was a few years back, when you had a building in the Redfern area, and you had two tenants. One was Channel 7, one was a government department, and they were quite long leases, weren't they? And basically, it was like you had a fair bit of comfort that you're going to keep your tenants for quite some time, and you could actually predict what kind of return you could get.
And that's a good example of the type of investment we make. You know, we invested it when it was called Redfern, but we could see there was one train stop from the Central Railway Station in Sydney, and it's now called Everleigh. It's a lot more popular. We've got Channel 7 headquarters there. We have 90,000 square metres being built for the CBA as a campus, and we own, in fact, a lot of buildings around that area. But when we initially purchased them, it was a reasonable leap of faith by us and, in fact, our investors, which they'll be rewarded for handsomely.
Okay, so one last question. People say, well, what can go wrong? And I would say, well, the toughest time for you would be a recession. But you have an answer to that, don't you?
Well, look, good question.
as you would expect.
Look, we've been through the closest thing that we're probably likely to experience in our life, the global financial crisis. And the answer simply is not to have too much gearing. So we try and gear our properties below 40% of the valuation. And what that does, it gives us plenty of come and go on any financing we've got. So less gearing, the better when things are looking tough.
Yeah. Okay, mate. Well, you've done very well. The chart of what the company's been doing shows that. Thanks for coming on the program.
Thanks, Peter.
That's John McBain, the CEO of Centuria. And coming up, the CEO of GA Education, Gary Carroll, will join me for an update on the company's outlook.